Well, with so much talk about what was a rapid change in this last summer market, today's video is about a week behind, and I'm sorry for that, but that doesn't mean we don't have to talk about the now obvious end of single family homes here in my market of Surrey and the Fraser Valley. And no, I don't mean the upcoming announcement about how all single family zoned homes are going to be rezoned into 3 and 4 unit developments across the entire province, even though we are expecting that announcement very, very soon. No, I'm talking about how over this last summer, the detached market has hit the brakes and how another asset class has slid into the driver's seat. And after I share the most recent market conditions from across the Fraser Valley here with you, at the end of today's video, I'm going to expand on what real estate agents like me are seeing out there in today's market, and what you, as either a buyer or seller in today's marketplace, can expect for the rest of the year. So go ahead and subscribe to the channel, click the like button so we can get this show on the road. No, I'm serious. If you don't click that like button, this video is not going to get started. Come on, it's just one simple click of. Now, as I jump into the numbers, please remember that this is how the market works. With 0 to 3 months of supply in any asset class, well, prices are trending up, and this is called a seller's market. 4 to 5 months is a balanced market, and well, prices do just that. And 6+ months of supply and inventory messages to sellers that, well, prices aren't going to get any better. And if they want to sell, well, they're in a buyer's market, meaning the buyers are the ones getting the deals. And those selling prices will continue to drop the longer an owner waits to sell. So remember those market indicators as we cover each market and each asset class, starting with the entire Fraser Valley, and particularly starting off with the amount of listings and sales. August saw 2,622 new listings come to the market. That was down from 2,855 the month before in July, but up from the 2,045 from the previous year. Sales in August fell, as we expect in the summer months, down to 1,273 in August. In July, that number was 1,368. But this last August was busier than the year before, which saw only 1,017 sales. The condo market as a whole saw 3.2 months of supply, getting closer to that balanced market territory. Townhouses are now the hotter asset at 2.7 months of supply. And look at this, the detached market across the entire Fraser Valley as a whole has now slid into a buyer's market, indicating that prices are set to retreat. Moving now from west to east in the Fraser Valley, starting with North Delta, condos saw 3.9 months of supply, barely escaping the balanced market. Townhouses again hot at 2.8, and the detached market in North Delta skyrocketed to 7.2 months. North Surrey, very similar, 3.6 months of supply in condos, 3.3 in townhouses, and North Surrey detached homes following the trend at 7.4 months of supply. The middle of Surrey bucks the trend slightly, with condos being the asset class there that is 3.1 months of supply, 3.3 in townhouses, and all the way up to 9.2 months of supply in Surrey detached. South Surrey is a little bit surprising. It returns back to the similar trend, but the detached market not doing so bad, as we're finding that the luxury market is less impacted because those home buyers don't generally carry mortgages to the same extent that they do in lower price points. Condos saw 3 months of supply, still a seller's market, 2.8 months in South Surrey townhomes, and just barely a buyer's market in South Surrey detached at 6.4 months. Cloverdale remains one of the hottest markets as usual. Condos saw 2.8 months of supply, still a seller's market in townhouses in Cloverdale at 2.1 months. And the detached market is sitting balanced. This is one of the best right now in the detached market at 4.9 months. Langley and Cloverdale mirror each other often. 2.6 months in Langley condos. Look at that, 1.8 months of supply in Langley townhomes. And we are just balanced at 4.2 months of supply in Langley detached. Abbotsford doing better than I thought it would be right now, 2.8 months in both condos and townhomes, and just slipping into that buyer's market at 6.4 months in detached. And Mission almost looks like the chart is reversed. Condos, although there are very few of them, 6.8 months of supply. A balanced market for townhouses at 4.1 months. Again, not a ton of townhouses out in Mission. And the detached market is actually doing not that bad compared to other areas at exactly 6 months supply. So, as promised, now let's talk about those stats for the summer and what we're seeing now. First off, this is for sure a tale of two asset classes. The detached market is showing lots of weakness right now. This means that if you are selling a detached home in most areas, but not all, you should expect that you will sell for less than your neighbors did just a couple of months ago. The reason for this is very simple. Even though interest rates have not really increased much in the last few months, that is only true for the overnight Bank of Canada rate, which affects variable rate mortgages. And those mortgages could be causing homeowners to come to the market because they can no longer afford their payments. But in fact, what looks like is causing the most substantial downturn in this, the highest asset class, is fixed term money. You see, in June, I had clients buying properties with 5-year fixed rates using credit unions, and those clients were locked in at that time for about 4.79 to 4.89%. But with rates now staying higher for longer, seemingly bond yields are rising, and yes, fixed rate money along with them. So now maybe a variable rate mortgage is still just a little bit under 6.5%, but we're seeing 3 and 5 year money north of 6.3% or possibly higher. What this does is reduces buying power of any given buyer in the marketplace by as much as maybe 15% since just June. And such sellers haven't quite caught on yet. And since they're not willing to yet reduce their prices, we are starting to see less sales and more listings in the detached sector, causing, as you just saw, months of inventory in detached homes across the whole marketplace to rise. And what this has then done is push many buyers into more affordable properties, and that would be the townhouse market. Again, as you just saw, the townhouse market remained quite tight over the summer as families are pushed into whatever they can afford as these new higher fixed term rates come to the market. So detached is cool. Townhomes remain warm, but not on the hot side of warm. And that leaves us then with condos. Condos are, well, let's keep the same analogy. Right now, they're room temperature. They are very balanced. First time buyers are still flocking to the condo market, and thankfully they are, as many investors who bought properties with variable rates at the peak of 2021 and 22 are flooding to the market. But the balance seems to be still pretty good with condos as buyers and sellers are motivated seemingly at the same rate. And the real hurt in the condo market is being experienced by renters that are now displaced by the investors selling to end users, causing many tenants to have to move and pay exorbitantly high rents compared to what they're paying now. But for anyone looking to move in this market, keep in mind what I've been saying for some time now. It is time to be careful and not toss around money like you've been used to doing in the past. And if you're selling, you only stand a chance to get the job done if your property shows like an 8, 9, or 10 out of 10. But buyers don't at the same time make the mistake of thinking that you're going to knock down a seller in price by a mile. Unless you are in some sort of specific detached market, mainly investor style older detached homes. And particularly if those properties were purchased within the last 2 years with a variable rate mortgage. And if you're a seller looking to maximize your sale price before the bottom falls out of this market, or if you think now is the right time to finally jump into the market and you need help, well, you can book a call with me right now using the link in the description below at a time that works best for you. Thank you for subscribing, clicking the like button. We'll see you in a couple of days.